All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I guess for most of us it's afternoon by now. But let's go out and take a look at just a few things in the market. My plan today was, to do this morning's training, and I was going to, take off the rest of the day, go out with my wife a little bit, and enjoy the day. Take a day break before, really ramping back into it. And I started watching oil, and I just, I couldn't resist, and so I'm still here in front of my computer, and still watching things, and made a couple trades with oil, and so anyway, market here is, we talked about the gap up this morning and the strength this morning, and needing to trade above 27.50 and really stick there, for the bulls to have control. And you can see what happened. It went 27.50 and the stops all got triggered. Those that, still put these arbitrary, stupid stops out there, they got triggered. Boom, boom, boom. They failed. We saw a fail back below 27.50, and it has been all downhill from there here for the S&P and right back to the overnight lows where the market is sitting right now and trying to actually break down right now. Right now, the market's in a little bit of free fall mode. And, we have seen this. We have seen this happen quite often going into the close or into the end of the day where the market just it loses all buy orders. All the buy orders just kind of go away, and it's only sell orders, and it really drives things down substantially. Now, we talked this morning about China holding up, and China kind of leading that rally, and you can see China led that rally, and yeah, it's pulled back, but not to the same degree as the market. The S&P here in the U.S., so, still holding its outperformance. But, today's about oil. I mean, you just look at the price action. This is about oil. Oil just down, $4 here today, down in that 56 area. We talked about it this morning, how unusual it is for oil to sit around 60. That's not a price level that historically oil has settled at. When it's gone on its rips, it's really never stayed at 60. When it's gone on its dips, it's never really stayed at 60. It's pushed down into the 40s and the 30s. And when it pushes above 60, it pushes up into the 70s, 80s, and 90s. And so, we're kind of in that no man's land for oil. And, seeing that get a little flushed or get flushed even a little bit more this afternoon as oil's down 10% on the week almost. That's a pretty insane move here for crude. And it's one of those where it brings in some questions obviously, but one of the things that we will often hear is, well, oil's down, who does that benefit, right? Because when oil goes down, there are some strong beneficiaries out there, with it, and some of those are the airlines. And this is kind of the natural, hey, if oil's down, airlines are going to do well, type of argument. It's not as good of an argument anymore. Because we tend to see these airlines be a little more hedged in terms of their fuel cost. And, it's one thing for oil to go down. It's another thing for fuel costs to go down. But it is a general positive as it does, overall lower the perception of expense for the airline industry. And this is something where if we're going to be talking about oil breaking below 40, which that argument can be made. I'll show you some of the numbers a little bit later on this week or maybe tomorrow. Some of the numbers in the oil sector that make that argument. I don't want to, sound overly bearish on oil, but I'll show you what that argument is in terms of the bearish case here on oil. And what that looks like. But if we're talking about oil down in the 30s, these airlines are going to take flight. That will cut a sizable expense piece off of their business and will give them a significant earnings bump there to their bottom line. Now, in a market that's more concerned about revenue than anything, it's not going to affect revenue, right? So, how positive is the market going to look at it? There, still remains a valid question. But overall, these airlines, tend to do a little bit better. Now, you do have to be careful with some of the hedging, and some of these airlines actually, have their own refining and other things. So, it's a little more convoluted than it used to be. But that's the natural quick look. Another sector that tends to benefit from falling oil is the refining sector. Valero, Phillips 66, those that take oil, they refine it and turn it into other petroleum products, mainly gasoline and other things. They crack the carbon molecule and they crack oil into a variety of other products. These aren't holding up very well today at all. This is not something where we can look and say, oh, well, naturally, boom. And one of the reasons is, take a look at the drop in gas prices. This is the U.S. gas fund. It's dropped from 37 down to 27. That's a massive drop. I mean, what are we? We're talking about almost 30% here in a month. Almost 30% drop in gas prices in a month. It's just a massive number, just an absolute massive number. And when you look at WTIC, you look at petroleum and the drop, it's had a drop. It hasn't dropped to that same percentage, right? Now, some of the disparity is in how the ETF is calculated, but it is still one where gasoline prices are dropping faster than oil prices. And so to look and say, well, oil's down, Valero should do well, no, because gasoline prices are falling faster than oil prices. So it's actually getting more expensive or hurting the bottom line for these refiners right now. But these are sometimes, the type of companies that can do well when oil's falling, but only if gasoline isn't falling to the same degree. So you say, well, gasoline, that's dropping like a rock. Okay. Who's that going to benefit? Well, who's some of the, who uses fuel? Night transportation. These guys are truckers. They transport via truck stuff all across the U.S. Natural place to look when fuel prices are dropping dramatically. But it's not really bouncing all that much, is it? Right? We have Old Dominion, ODFL. It's kind of on the decline today. And, take a look. Old Dominion's been dropping as oil and gas have been dropping. That doesn't sound very logical, right? If we come into some of the other truckers, if I come in and put this up, ODFL, we'll just go into the trucking sector here and look at the highest volume truckers. But Knight is up a little bit today. YRCW, it keeps dropping. JB Hunt, well, let's take a look. It's continued to drop. Right. We're not seeing these companies. You go, wait a minute. This doesn't make any sense. These stocks should be doing better. Their expenses are coming on down. What does it tell you? It's a clear message from the market. It's just as loud and clear as the market could be, and that is that the market's worried about a recession. The market is absolutely worried about going into a recession and seeing earnings actually go from growth, which is where they're at now. The market is worried about earnings actually starting to contract. Is it a rational fear? Who cares? It's the fear of the market. Does the data support it? No. The data supports this. The data supports a curve like this where there's been nice growth, great growth, right? But that growth is starting to slow, right? That growth is not at the same trajectory as what it has been. It's starting to slow. The market's pricing in for the future, right? If we look at the future, the market's pricing in something like this starting to happen. That's what the market's pricing in. And ultimately, the market may be right. What happens if they're not? What happens if growth actually takes a small uptick? There is going to be a great whipsaw trade here, right? But that's what it's going to come down to. It's going to come down to the market's perception of growth. And, right now, the market is absolutely pricing in a recession when it comes to the key elements that are out there. Okay. And so, we've seen other times where the market's priced in a recession and been dead wrong. We saw it in 2014. We saw it a couple times in 2012. Heck, we even saw it earlier this year. The market will price in a recession and not necessarily be right. But, that is what the market is pricing in. And we can see it very clearly because of the fact that oil and fuel costs are dropping, but transports, especially in the trucking industry, continue to go down. Now, the IYT is up today. The transport ETF is up today. But if you were to take airlines out of that, how well is it doing, right? XAL is up 1.2%. So, you come into some of the rails, right? CSX is up fractionally, but even some of the rails are getting dinged a little bit. With the rails, they're not as big of users of fuel. Yes, it's a big part of their business, but one of the things with the rails is lower fuel cost isn't necessarily a good thing for the rails, because so much energy, fuel is transported via the rails, right? And so if fuel cost and oil cost are dropping, then there's going to be less transporting of those, which will drop, some of the earnings for the rails. So, it's not one of those where you can look at the rails and say, oil down, okay, rails are going to go up because their fuel costs are cheaper. There's a little more to it than that, and they're actually a little more positively correlated to the price of oil than negatively correlated. But that's what we see going on. Oil is dropping things here this afternoon with China being a big outperformer here. Outside of that, most things, the movement on them today is pretty nominal. It's pretty nominal. You go look at a Pepsi, it's up 3 cents. Okay. You go look at a Ford, it's up fractionally. You look at an FCX, okay, little mini bounce. You look at a Caterpillar, it's up $1. Okay. The banks, they're modestly higher here today. We see a little bit of mix in tech where something like a Netflix is down $1, but, a Microsoft is up 50 cents. There's just kind of some modest movement, going on, but nothing really major. But you look at energy and you go, wow, that is one heck of a move. We have seen $4 down days in energy before, but that is not very normal. To see this big of candle on oil, that is not very normal. And that is one huge move, for the energy sector. And I think that is the note here, the big note here today. And let's face it, this is one of those things that when it comes to commodity markets, right, when they start to get into this type of phase where, it's an orderly decline, and then it just turns into free fall, it can last for a while. It can last for quite some time, but the volumes in the oil sector are going to be massive, and it's probably one where a lot of the energy names, path of least resistance will remain lower, at least for the time being. I made a comment earlier today that when OPEC comes out and announces that they're going to cut production, we will likely see a bounce in energy. We'll likely see a bounce in oil and then a revisit of the lows. Okay, so far, I haven't seen any announcement from them. I've seen a lot of speculation, but so far it is not there. Okay. All right. Market vibe here today is unchanged so far. You look at some of the market components like the bullish percent index. It is down a little bit, but it hasn't had that 6% move down. So it's not really altering anything, in terms of the metrics. You look at the number of stocks making new highs versus new lows. We definitely have more stocks making new lows today than new highs, but we're nowhere near the depths that we saw in October. Nowhere near those levels, and so in a lot of the metrics, including this one, it really just kind of looks like some of the selling that we saw in February, or in February and March, after that kind of early or late January, early February drop in the market, where we had ping pong up and then we had a few days, heavy down. Then we got another ping pong up and back and forth. That's what the metrics are looking like, very much. And they're very neutral in terms of their read, and, neutral, but on a higher volatility. It's not a neutral where you go, the market's just not going to move. Over time, over the course of a 2 to 3 week period, we may see that the market hasn't moved, but there will be plenty of oscillation, short-term oscillation in that. So this isn't a 2017 neutral signal where you go, all right, is the market going to move 2 or 4 points tomorrow? This is one where, there's still 30, 40 point oscillation out there. And we're going to have, whipsaws back and forth here. Okay. Even as I'm talking, we continue to see oil drop and just continues to drop. This is not something that's had a high volume bottom that you look at and say, I can day trade it back higher. This is something where the traders, they can't get out of their contracts fast enough, and they continue to dump on these contracts here. Okay. Alrighty. No Katie signals here today. I haven't checked Trend Riders yet, but that'll come out here in about a half hour. So those will be posted if there are any. I haven't been too engaged in terms of, what are some of the trades I like? I traded a few in the energy space here today, just some day trades. But as far as other setups out there, there's nothing that's, jumping off the page at me here. Where I look and I go, that's kind of a really interesting move. Ford has a decent continuation pattern potentially setting up, but isn't breaking the levels it needs to. We see things like GM, trying to break above the 7, but have pulled on back. But even at GM, the volumes are really light. There's no real kind of strong indication that they're ready to move in a big way. So it's for most stocks out there that are on my list, seeing things that are pretty neutral. Energy, quite the opposite. It's about as bearish as bearish comes. You have Conoco breaking into new lows here today, and there's no support underneath. This isn't something where there's any kind of major support. We haven't seen enough big volume to suggest bottom is in. That could happen, but right now they are in free fall mode. And it's one of those where I would not be surprised to see, some more downside, come in here to this space. But if you're going to play it down, you have to be wary of that announcement that will likely come. And it'll probably be an announcement that says, hey, we're going to do it next month. And so you're going to have to sit there and go, okay, gauge the bounce, and then, all right, they're going to cut next month, and that'll bounce again, and that'll provide some nice trade opportunities, and should be fun here as we kick off the challenge on Friday. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.